The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very first day of November. Wow, what a market. How on earth could they keep this market above 18,100 when the volatility index is in the 18s? They are holding up the market. It is just clear as day to me because under every other circumstance for the past many years, most of you know when we've looked at the VIX this high, you see triple-digit down moves in the Dow. You see a strong double-digit move to the downside in the S&P. This is a manufactured market. If ever there was one, I'll be talking about it tomorrow night. Who the they are is very interesting. But there is a they. I always thought, conspiracy theory. I remember when we first came to the United States years ago, we were listening to the radio, to public broadcasting, and it was a Sunday afternoon, and there was this show called Conspiracy Theory, something conspiracy. And we had come from South Africa, where you don't even mention the word, you didn't even mention the word conspiracy because you were liable to have your phone bugged or whatever. And our eyes widened, and they were talking about all these conspiracies here in the United States of America. And then over the years, I figured out, you know what it is? It's in the most romantic way of looking at conspiracies. Maybe you can go to conspiracy theory and it becomes really far-fetched. But in real life, there are things that happen that for instance, this whole thing that's going on in the political scene right now, you could not even make a play like that. In fact, I saw a play the other day. I spoke about it yesterday called Warrior Class, playing here in Boston. Very, very good. It's about politics and the skullduggery, etc. You could not make up what has been going on. So we're looking at charts. As soon as I can just have a drink out of my TFNN cup that says Basil. Let's look at what's going on. Tomorrow I'm going to be discussing what the market is telling us, why on November the 9th, everything is for sale. Forget about worrying about the Fed, worrying about what the rates will do. If they want to raise rates, they can raise rates. If they want to cut the rates, they can cut the rates. They can do anything because why? Perhaps the election is all over, but wouldn't it be ironic? I mean, this is the way things work. It was Donald Trump that, the newspapers couldn't, the media couldn't get enough of it. Is he not going to accede to a loss to Hillary? And then all of a sudden it's Hillary saying, wait a minute, what's going on here? I've spent 35 years, every hour of every day, working towards this goal of being the first woman president. It's mine. You had your first black president. Now it's the time for the first woman president. I'm going to be talking about that tomorrow night in my webinar. What is the webinar? Right here. Front page of TFNN. Right there. What does it say? An opening call subscriber event live with Basil Chapman after the elections. Are the markets still a buy? I'm going to be talking about the markets. I'm going to be talking about what the markets are saying, what the different sectors are saying. What's going on around here? Why is the market being held up? And it has to be held up by something because it's certainly not the rotational aspect. This market with the VIX in the 18.17s right now, this market, the Dow should easily be down intraday triple digit. That's just the normal thing that happens. You can go back historically, and that's what you'll see. Maybe once or twice it's happened, and the market's only been down a little bit. It's only down 22 points in the Dow at 18,119. S&P is down 4 at 2122. The comp index at this particular moment, if I move that away, the comp index is down 9 at 51.79. Oh, wait until you see the QQQ series. This is very interesting. Oil just had a pop to the upside, and it couldn't help the market very much. You've got gold up 16 at 12.89. I like what's happening. I like what's happening in the gold miners, in the actual stocks. They're acting fantastically. Crude oil, as I said before, if I can, I always forget to put it back in there. Let me just do it over here. Crude oil, CL. Right now, crude oil is at 47.11. It's up a little bit. This is really an interesting market because there are things that are going on here. You can call it distribution because we've gone basically sideways. We'll look at the charts in a moment. Let me just finish up. Silver at this particular point is up 64 cents at 18.45. High-grade copper is up just a little bit at 2.5. Oh, wait a minute. It's now in the 2.5s. Okay, I need to look at copper. Let me just move this away here. HG is HG. Whoa, copper is soaring. That is really interesting. Breaking out of the downtrend Chapman wave inside track resistance right there. Whoa, first time it's done that in quite a while. And now, maybe it's going to hold. This is just the second day of the week, so we don't know. And it's the first day of the month, so we don't know about the monthly chart. But this is very good action in copper. Now, wow, that means that something's going on out there that has to do with maybe building, because if you look at the HGX index, wow, that is looking very poor. HGX, it's up 18 cents at 22.7. And that is the housing sector. I'm going to be talking about that as well tonight. Home Depot, Lowe's. I'm just going to be talking about a bunch of things tomorrow night in that webinar, and it's a webinar for subscribers. But it's easy. If you want to come to the webinar, you can sign up for my opening call. It's a free 1 month. Believe me, in a month you get a lot of different charts and different analyses of different sectors, etc. Plus, of course, our trades. Now, what's really interesting about this, if you go to the TLT has made a low leg E to the downside. It's attempting to turn around, and I suspect if the TLT, which is Lehman iShares 20-year Treasury bond ETF, if that in fact starts to move higher and can this is leg D in the weekly chart. A lot of work needs to be done. But if somehow by Friday, the TLT, trading at 130.76, down 49 cents right now, manages to climb to the 132.50s, preferably touching the 133.51 area, the 9-period exponential moving average, then all of a sudden you're going to be looking at something that says the market could be weak going into Friday, if bonds are perceived once again as a safety factor. Now, you tell me, regardless of the economy, and I do have some statistics that suggest that the economy is doing just okay. It's not bad. A not bad market, a not bad economy is good, especially if there's a series of rotational corrections going on in certain areas while other areas are picking up the slack. But at the same time, what we're really looking at in this particular instance is what's going to happen if the VIX remains high. VIX at 1824, just move to the upside chart. What happens if it suddenly starts to decline? And we'll talk about that. Basil Chapman, Tiger Technicians Hour, Dow's down 24, S&P's down 4. I'll be right back. Look at this market.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Here's the 10-minute chart I showed earlier on. Huge cup formation. Huge arch formation. Huge. And what we're looking at is there's a left side, right side price. Time actually came in a little bit early, and now it's going to do some testing. I would just recommend that think of it this way, that there's a lot of evidence to suggest lower highs and lower lows, at least in this particular phase right now, and that the rallies should fail and then we should come back. This is going to be very important because 2113, the low that was just made about right at 11 o'clock, I suggest that has to hold, because if you undercut that and you hold for three 10-minute bars below 2113 on the 10-minute E-mini chart, that it's going to make it's not telling you what will happen to the downside. What it is saying is that the upside is very limited at that point. This is the opportunity to rally is the 10-minute bar we're in right now. That's to make a V-shaped recovery to try for 2120. It managed to get to 2117.75, and now it's really struggling. So we'll see what happens. But this bar right here, 2115, that just has to be support for a move that at least attempts an arch formation. This is going to be a tough market. That's the way I'm seeing things. Okay, so that's the 10-minute E-mini. Now, I had a bunch of questions, and I think it's very important. Let me quickly look in the den. Yes. Lots of stolen copper in the ghettos. Let's see. Some political stuff. What does Mrs. Chapman say about that? Oh, that was about the conspiracy. Even today, this is a long time ago. Even today, we laugh and chuckle about that. Both of us, our eyes just went wide open. We were talking about things that South Africa never, ever spoke about. Well, you spoke about it privately, yes, a lot, but you never spoke about it publicly, let alone over the radio. Okay, so let's just go through the questions. Let's see, they start over here. XOP, oh, very good. XOP, I haven't looked at for a little while. XOP had a B minus. Oh, that was a very interesting thing, because that was either an F or, yeah, that was a G. Sorry, that should have been a G. I didn't even put it in as an alternate count. I'm not sure why, because I think it looked very strong just as it was happening, but I didn't follow it up. There was a G/B in the end. It turned out to be a G. That is definitely a sell mode in the XOP. The S&P oil and gas exploration holding the 20-period moving average, trying to, at least at this point in the daily, under the 9-period moving average. Everything about it says, though, that was incorrectly put in. Everything says it's not F/C. It is almost certain to be an F right now. And if this goes down much more, then I'm going to call it an F. I have to wait the week. It's a weekly chart. But it looks to me like the MACD is starting to fail. Stochastic's under 80% at 69%. I know this pattern well. It's a pattern that says sideways to lower highs, lower lows, and then it could keep chopping around in this area between 32 and 38, and it's trading at 35.73 right now. So is it a short? Is that the question? What was the question itself? Let's see. XOP. Bulls looking for 40, bears for 30. Where is it going? Oh, I don't see 40 at this particular time unless something fantastic happens. More likely I'll see at 35.71 a test of the 36.80 to maybe 37.10 area, then another little arch formation. And if the candle of the week of the 30th of September, 34.85 is taken out, you're coming all the way down, and I'm going to draw it in. This is another arch formation right here, right there. It'll be excellent action if it can get to 38. I just don't see that right now, but if it can, that'll be very good. Now, so that was the XOP. So I'm looking 30. Well, I have to go step by step. A close into that, into the low 34 says, yeah, you can start to keep coming down. Yeah, you will continue coming down. And a move up says, no, just sideways action, nothing. As a trade, it's already at a move. I would only short and move to the 36.54 9-period moving average, maybe a little higher, and then I would short it with a very tight stop. That should work. Bob wants to know about JP Morgan, JPM. Now, I will be doing something with the banks tomorrow in my webinar. Why? Because it's really important. The banks were favorably moving higher under the influence of, let me just finish this, A, B, C, is that a D? No, D, double top, D. No, is that a penny up? I think that might be a penny higher. Let me just double check. 69.77, 69.78. Okay, 69.77, 78, that's an E. I'm calling it an E for now. I think a lot of things that I'm looking at are right at D, E's, and F's in the dailies right now. This is going to be a very tricky period. So JP Morgan, what's the question? And Bank of America, wave count by BAC December 16 into April 2017. I think you're talking about yield steepening. So you're talking about the call 16. Yeah, I think you're talking about, wait, BAC, December 16. Okay, give me a second here. A, B. This is a very tricky one, and I'll tell you why. I had parallel highs, and because of the technicals, I'm going to count them as artificial, as phantom peaks. I want to be a little ahead of the game, so I'm calling this a D right now, although technically it is not in the Chapman wave. This is a more sophisticated analysis, sophisticated in the sense that you have to understand the concept of phantom peaks, parallel highs. So I want to be ahead of the game always in the Chapman wave. I don't want to be behind. I want to say, oh my goodness, that's a B. I'm expecting a C and a D, when all the technicals and everything are pointing right now to the fact that it's becoming a little toppy. So because of that, I'm saying Bank of America could be pulling back. Can you have patience, Bob? Bob, don't do anything right now. I'm not even sure I'd short it. I'd be waiting to see how $16.20 to $16 holds on any pullback over the coming 2 weeks, or if it breaks out to $17.10. I don't like to say that because I don't want to miss a move, a nice percentage move either up or down. In fact, I'm just going to say wait the day. I need to see where it closes. I need to see where the market is at the end of the day, because they really are trying to hold this market up very nicely. So I'm going to do this. I'm going to say to you, if you're looking at a long position going into 2070, you could, in fact, at 1662, if you're looking for the 18s or higher, then a 50-cent stop is reasonable if you're expecting $2 or $1.50 to the upside. I'm just going to say to you, if I did buy a call I would only buy the initial call right now to say, you know what, I'm just going to get started on one call, and then you can add as many as you want. But get a feel for how it's responding when Bank of America pulls back. How does that premium respond? That's really what you want to be looking at. And if you are, I think you're looking for the long side. And if you're looking for the long side, then I'm just going to suggest don't get carried away. I think you're going to have plenty of opportunity in November to put it on your positions. That's the way I'm thinking anyway. So that's that. Next question is, buy or sell on election results like 2012. That's what I'm preparing my subscribers for tomorrow night. In fact, we've already started the preparation process on what I'm thinking. And the only thing I can say right now is if you're looking at the S&P SPX.X, look at this. That H pattern couldn't even get higher, and now it's coming back to almost test the lows. This is a weak market, as I see it. I'll be back. Dow's down 27, S&P's down 5. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we had a couple of other questions, so I'm going to get to them right now. This is my opening call webinar for subscribers by Basil Chapman, editor, Wednesday, November the 2nd, 2016, at 6 p.m. to 7:30 p.m. Eastern Time. After the election, are the markets still a buy? New highs to come? But when? Sponsored by TFNN. I'm going to be talking about the coda phase. Are we there yet? Well, we are in it. And what does this mean, coda phase? The concluding phase of a mega move. And I'm going to be talking about this coming 3-week period. Mostly, I'm going to be talking about. I'll do something with the comments on the on the candidates. Not telling you who to vote for, just telling you what I'm looking at market-wise in relation to. But it implies, this coda phase implies, mega constructs, large-scale themes. The norm has moved so far away from normal that just giving back a little is still far away from normal, let alone a period of regressing to the mean. And within this coda phase, there are many times where or when it feels like it is over market-wise. Things just cannot extend further. And then it extends even more. So that's why this phase is so important. That's what I'm talking about. I mean, we're trying to identify sectors, stocks, etc., what I think are very important. Now, one of the things that's very important at this particular moment is that I cannot ignore a high VIX. Now it's at 18.57. And one of the reasons why we've added some of our positions on the short side is that there are some sectors and some stocks that are just not acting very well. And I'm going to be discussing them in the context of markets. I'm going to be discussing them in the context of the home builders, of the IBB, the biotech sector, of the, say, a Home Depot. Look at Home Depot. They keep talking about housing, and Home Depot has gone from the high 130s to 120. That's one of its biggest moves to the downside in a long time, since that beginning of January, December into January decline. And it's a peak E in the monthly. What for the Home Depot, building material, appliances, home electric, everything. This is a big deal. So what on earth is going to get the market to move higher? That's what we're going to be talking about. Here's another thing that's very important. We've had a move in crude oil. And is that move over? This rally has failed below the previous rally when it went from the January, early February, I think it was February low, to the high of 54.67 back in June of 2016. Then it turned around, went lower to about the 41, 42 area, rallied up to this recent high of 52, and now it's down at 47. This is a fading pattern. Is this monthly chart telling us that it's all over for crude? I've been talking about this for a very long time, saying that in my analysis of crude oil, this is the very long-term analysis of crude oil. I suspect, let me show you this chart here. This is what I'm going to be talking about and explaining it in market terms, not just in visual terms. This is a very important period. Look at that trend line that goes all the way back to 2003. What is it saying? Well, it's saying that this is a very important phase. This is the weakest rally we've seen in crude oil ever. I mean, based on these charts that I'm looking at, I don't mean ever. I mean, for a very long time. So now that's the relationship. I'm going to be looking at, say, I always get asked about the HYG, I believe it is. Yep, the HYG, which is the iShares iBox Dollar High Yield Corporate Bond ETF. It made a peak E right here. Look at that. Peak E. I didn't finish that chart. I mean to do it. And I'm going to put this down arrow in now because it's way underneath the 9-period moving average. But the MACD and stochastic in the weekly chart have turned down. Well, the monthly chart is still okay. The daily chart made its peak E right arm extension, or what we call a rogue wave, spike to the upside back in October. And now it's gone from over the 87s to 85. That's a big move, 2 points down. And I suggest to you that together with JNK, I'll be talking about this as well, the whoops, where did it disappear to? JNK. Oh, don't type it there. Type it, edit, little hat, get rid of it. There you are. Together with the JNK. Here we go, JNK. There's that same thing. Spikes to a peak E, spikes to an F right here. How these works out, this Chapman wave methodology identifies the letters. I to this day, how many? 500,000 times at least I've done this over the years. Every time I look at it, I say, how on earth does it know to turn down at these letters, D, E, and F? All right, well, here we are. It's gone to a C in the monthly chart and still looking quite good in the monthly. The weekly chart says, hey, we've seen this pattern before. We could be pulling back, having a high-level consolidation if it can hold between at 35.96 down 30 cents JNK, which is the Spider BB Barclays high-yield bond I'm going to call it a fund. It's an ETF probably, but a fund. If it holds between 35.50 and 30, it doesn't have much room. 35.50s, it better hold. Otherwise, this is the candle that will attack. And what does it say about yields? Hey, have a look at this. Remember we talked about the yields? And I said, in my long-term charts, I showed subscribers over the weekend, amongst the many charts, I showed them this. And I said, wait a minute, this is going to be very interesting. Why? Because within the context of what we tend to look at, what I like to look at, did I just do something wrong? I don't think I did. Okay, let me just get that out the way. Okay, that's coming. Waiting for data. Please, I hope I didn't mess you up. That's good. Close. And there it is. Look, I said that right arm extend, that right shoulder failure pattern needs to work in the wood, WOOD, iShares Global Timber and Forestry ETF. Why? Because the home builders are turning down in the weekly chart. They've gone to a leg D. And there's the weekly chart. And that says that this should be a failure mode. Now, I bet that if I go to this in my daily, you will see the MACD and stochastic failing to confirm the recent high. Look, here it is. That was without it, but when you do this enough times, you get a mental picture. And now we're looking at, whoops, where is it? Yeah, the weekly chart. There it is. The MACD is lower than it was over there. Stochastic way down at 63, and right there it was up in the 83% area. So let me just do this. I don't often show this here. That's why it's not notated. A, B, C, D, E, F. I'm calling that F for now. I'll have to change it if it makes a new high. But that looks to me like a failure pattern. So we're going to be watching this. Why? Because it's saying, regardless of what happens in the election, some charts are just doing their own thing. And to be helped by the election, other than a big quick pop-up over 2-3 days, other things need to be going on. So this is the way I'm going to be doing it. I'm going to be trying to be as objective as I can. And we're looking at different areas. I had a question about the OIH. Now look at this chart here. The OIH has made a peak C, like a C minus in the daily. That's unusual. But when you're under a previous high, you can fail. It doesn't have to go to a D, and you're under a previous peak C minus. That's the characteristic. This one's only a B minus. And this is saying to me, crude that OIH market vectors oil services is having a terrible time holding gains. That's very interesting. And now you've had BHI, which is in the area, General Electric took a 67% interest in them. Man, I tell you, this is a fascinating market. I will be back. Dow's down 30, S&P's down 5. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So the UNG, this is the United States Natural Gas Fund. Remember the other day I said I made a peak F in the daily. There's an F/C in the weekly. My thinking was that it's probably an F based on the way the MACD is acting. But I wasn't sure. Well, now I'm sure. It's a peak F. It's not a C. And that means UNG daily has gone to a sell mode. The weekly is, well, I got to wait the whole week out. But so far, it looks like it's at least a sell signal. Monthly chart, this is not a good move for the monthly chart. So be careful with UNG. Excuse me. I do suspect that it's getting close based on the 120-minute chart. This is just a guess. Yeah, it's getting close to some kind of a bounce, but you got to be real careful. And this should be I think this is the season for gas, right? Natural gas. This should be a good period. So why didn't sustain the move? I just don't know. I think that there's a glut of many of the oils. We'll see. Meantime, back at the ranch, I had a question about heating oil, which is at HO, I believe. Let's see if I'm right. Yeah, that's the continuous contract. So the weekly didn't go to a new leg up. It just failed at that double top. This is a gray B. Let me just make sure it's a gray B. The high is 1.6431, and the high back of the peak D on June, the week of the 10th, is 1.6614 for one. Oh, wait, whoa. Oh, 1.6431, and this is 1.6614. Okay, yeah, it did not break, so that's still gray. That means it's kind of a gray area. I've got to put this in. I always do this. You've got the V-shaped pattern. It should be a powerful break to the upside. It hasn't done that. Therefore, I must put in the arch formation, which says, be careful, there could be a failure here. So heating oil, is this going to be a great winter? I don't know. So far, for us in the Boston area, it's not too bad at all. So this is B. There is no C. That's a C, and it's going to be a C failure. Oh, this is interesting. A, B, has to be a C, A, B. Oh, it's a C. It's an overlapping C. That should have gone to a D. If this fails, this is going to be very bad action for heating. Are we going to be having a warm winter? I'll do more on this. I'll try to do it tonight. I don't know if I'll even be talking about it in the webinar tomorrow, but I will try to do something because this is very important in terms of heating oil and the winter. This could be our, what is that little thing that pops up in May or whatever it is? The little thing that pops up, and if it doesn't pop up, the winter is, hey, I'll get it. All right. It's got that funny name. I wasn't used to it until I came to the United States. Groundhog. It's a groundhog. I never knew about groundhogs until I came here. So this could be a groundhog move. Let's just see what happens with the heating oil. I'll do a little more work If it held the high of today, I would have said, wow, it's going to a leg C in the weekly, but it failed. So this is, I don't want to get carried away. I'm not going to give any opinion on HO other than to say below 149, it's very negative. And if it can hold here or move towards the 1.57 again, it's at 1.535. If it go to 1.57, that's really good action. Good action for heating oil, lousy action for the winter. And then quick question about Apple. April, what's the notation there? Apple is made a peak E top, alternate count, then it became a peak E back early October in the 118s, and now it's trading at 112.59, but it's a peak D in the weekly. And the question was a good statement, nice short brief. It said HD, Home Depot, and Apple, and LB. What's LB? LB is LB. I know LB. LB is LB. LB. He just died recently, the author. LB. Edward Albee. Oh, L Brands. Yeah, L Brands. Right. Gap down. Oh, man, this winter is going to be one tough winter. Look at Amazon. So this is L Brands. They used to be called something else. I can't remember. Okay, Amazon. Look at that. Amazon is just acting very poorly. It's holding beautifully if you look at the monthly chart, even the weekly chart. But it made that Chapman Wave 5, peak F in the daily. It made a peak D, Chapman Wave 5 in the weekly. I'm a little concerned about this coming season sales. I think there's a problem. If Amazon is not doing, well, it's not doing badly, but it's not doing well, we're going to be watching this real closely. Okay, so that's the question. Look at Apple. Didn't I just do Apple? Yes, I did. Great memory, huh? Apple acting very poorly at 112.53, down 1. It's really struggling. It's making this big H pattern in the weekly, the second H pattern in the monthly. This is going to be a tough winter sales, I think. We'll watch it closely. All right. Now I need to do some work that I wanted to show a little earlier on. I was asked about gold. So here we are. So gold is acting very well today, up 15 at 12.88. It's in leg E, a very quick C to D to E. In fact, it's a very quick A to B, C to D to E in the daily chart, but it's only leg A up. It's a very determined move. I'm kind of impressed. I'm more impressed at the way the gold stocks are acting, especially one that we missed by a couple of cents, and it just keeps moving up every day, and we can never get it. But we are in the sector. We started a position today, and I have to tell you something. I'm looking at the dollar, and this sharp move down at a peak D. How important are these Ds? Look at that D, sharp move down. Then it holds and it makes another D, makes a Chapman Wave instant restart. Goes to the peak D right. I'm not putting a down arrow yet. The day's not done. I'd actually like to see two closes underneath the 9-period moving average since the peak D, and this will be the second one, and then I might have to put a down arrow. But that's the daily. The weekly chart is still holding very well. I am going to be talking about the dollar. I'm going to be talking about the relationship of gold and the dollar. I'm going to be talking about the EUR-USD, making the inverses, the lowercase h that goes to an M pattern in the monthly, and the dollar making the soft two cups, the U-shaped U pattern, W, right there. And that I still think it's going to go to 100.52 for a leg D. That's what I'm thinking. So we're going to be discussing that and why, where, how, and what we can do about it, what the impact is on, say, things like a Johnson & Johnson, which has made a peak E in the weekly. And I've got this as either a G/B in the monthly. I'm calling it a B still in the monthly. I don't see any reason yet to change it. But the dollar is impacting, the high dollar is impacting these multinationals. Okay, so now this is the question. Within the context of markets, what are the patterns that have been familiar? What are the patterns that are telling us that the focal point, and I said this at my last webinar, and the focal point is still in this pattern. And that is the pattern that I call in the Chapman Wave methodology, the lowercase h that goes to a lowercase m, and like a continuous arching formation. Right here, you can see it. Look right there. This is the daily. I want the 120-minute chart. Let me just show it to you right here. Nope, let me show it to you right here. See this? Look at that. Just a continuous, there were two over here. I decided to make it just three, so it's very clear. There's the lowercase h right there. There's the lowercase m, and then it becomes a continuous worm pattern. Looks like a little worm there. Okay, and that's right here. If by the end of the day, instead of rallying like it often does, after being down or sliding after it's been up, if today, in fact, it takes out the low of yesterday, which is Dow 18,092, the low so far today is 18,000. Oh, that is the low of today. If it takes that out again, because it's lower than the low of yesterday of 18,094, that's going to suggest that this pink line right here is vulnerable to the 18,062 area. I'll be back. Basil Chapman. Dow's only down 33. S&P's down 5.5. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Oh, folks, we're back. And so what we're looking at is the Dow down 43 at 18,099. Question came along, two questions. One is wood, W-O-O-D. Oh, what's holding up wood? If the lumber futures, LBS is down. LBS. So all I can say is that there's a relationship because it's in the world, it's global timber and forestry, so there's kind of a mix. I don't quite understand it. I'm not going to make assumptions about something that really is beyond me. All I can say is I've followed them for years, and it's very unusual to have wood move away from the housing instrument, the HGX. So that's what I can talk to. But as far as lumber is concerned, I don't think I can actually answer that question. It's a good question. And the other question was, let's see. The question was, Tucker in the Den said, VIX is up over 40% from its close at 13.02 on October the 24th. No stock index is down over 3% except for the Russell. Not sure I've ever seen that. Which one catches up to the other? So I answered and I said, Tucker, the simple explanation is that fund managers are really nervous and they are finally buying heavy insurance, and the repercussions are actually quite clear as it resolves itself. Another thing I'll be talking about tomorrow. But most importantly, what you want to be looking at is, I have seen this occur where the difference is quite stark, but you have seen the market actually pull back. In other words, I've not seen it when the market, as it was a little earlier on, was actually up on the day, and for the third day, the VIX index was running strongly. That is unusual. I definitely have enough evidence to say, if I had to show you my right here, that I show subscribers every day, my overview section, if you go back to this, the VIX index right here, you'd be able to see many times where the VIX actually did spiral to the upside. But in fact, what happened is that the Dow did pull back some. This is a little different. See how tight it is over here? Look how sharp it is when these big moves occur. So that's the part of it that to me was a little bit unusual. But I'm looking at it as if finally the fund managers are saying, hey, I need insurance. This is getting just too dangerous. That's the most important thing. And Steve says, Steve Rhodes says, Tucker, it happens much more often than you think. Oh, there you are. I will show a chart during my show that shows just that. Yeah, Steve, I agree. It has. My discussion is that 3 times in a row to be that high, I know it has happened, but most of the time you've seen the market actually pull back, not nearly as much as you would think, but it has pulled back. This is a little unusual. Now you're starting to see the pullback that, from my subscribers, we were expecting to occur today. Okay, I got those questions out the way. Oh, look at the time. So once again, let me just do this. For me, this is an incredibly important webinar. I hope I'm going to be able to do it justice. Let me go to the front page here. Opening call webinar for subscribers by Basil Chapman, editor. This is Wednesday, November the 2nd, tomorrow night, 6 p.m. to 7:30. What's really important about this is after the election, are the markets still a buy? Why do I even discuss that? Because if you look at the monthly charts, at this particular point, they are still, for me, in buy modes. That's the Dow, the S&P. These are very important. The QQQ series, even though the Qs have given some kind of a sell signal, sell mode on the daily context. This is monthly charts are still very, very strong. I believe we will go. Now it's talking about the timing and what do we do and where do we go. We've started preparing for that, and we'll be preparing for that again tomorrow. So, and that'll be with the relationship of the dollar, of gold, a whole bunch of things that we'll be talking about. I'll be talking about tomorrow night. And you can have a 1-month subscription to my opening call tomorrow, and you'll get it for free. I mean, this is a win-win situation, and hopefully I can be as elucidating as possible tomorrow night on the concept of the markets. I'll be back a little later with Tom O'Brien. Have a great day. Otherwise, I'll see you tomorrow morning, same time, same station. Stay tuned for your swimming lessons and all the others all the way through to 6 p.m. this evening.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,